Welcome back to our deep dive series on cost of goods sold. In my last video, we broke down cost of goods sold for the real estate industry. Today, we are diving into a sector that millions of entrepreneurs can relate to: e-commerce and retail. If you sell online, whether through Shopify, Amazon FBA, Etsy, or even your own website, you already know that your costs are more than just the price of the product. What about shipping? What about those pesky credit card processing fees or Amazon's FBA fees? So the big question is, which of these belong inside your cost of goods sold? By the end of this video, you know how to calculate cost of goods sold accurately for your online store, so you can stop guessing and start knowing your real profitability. Let's get into it. Let's start with a classic example. In accounting, cost of goods sold is calculated like this: beginning inventory plus purchases minus ending inventory. That's the standard formula, and it's used worldwide in traditional retail businesses. But let's break it down slowly so it really makes sense. Beginning inventory. That's the value of everything you already had on your shelves or in storage at the very start of the month or year. Think of it as your starting stock. Purchases. This is all the new stock you bought during that period. Then ending inventory. At the end of the month or year, you count what's left on the shelf. Now, here's the logic. If you started with a certain amount of stock, bought more, and then subtracted what's still left, the difference is what you sold. That's your cost of goods sold. Let's use an example. Imagine you own a small online boutique. At the beginning of the month, you had $5,000 worth of products in stock. During the month, you bought another $3,000 worth from suppliers. That means you had a total of $8,000 of product available to sell. At the end of the month, you check and find $4,000 left on your shelves. That means the other $4,000 must have been sold, and that $4,000 is your cost of goods sold. This is the foundation of retail cost of goods sold. It works well in brick and mortar stores or traditional retail. But e-commerce adds more complexity. Let's take it up a level. That's the classic formula you see in every accounting textbook. But if you're in e-commerce, you know it's really that simple. Let's take it one step further and talk about something called landed cost, the real cost of your inventory. Here's where things get interesting. When you calculate purchases in that formula, it's not always as simple as just looking at the supplier's invoice. Why? Because the real cost of your inventory isn't just the product price. It's what's called the landed cost. Landed cost means, what did it actually cost to get the product into your hands, ready to sell? That includes the purchase price from the supplier, the shipping or freight cost to bring it to you, any customs or import duties if you're bringing it in from another country, and even fees charged by your warehouse to receive and check in the shipment. Let me give you an example. Imagine your supplier sells you a product for $10 per unit. That's the invoice price. But then you spend another $1.50 on shipping and maybe 50 cents on import duties. That means your true cost per unit is actually $12. If you only record the $10, your gross profit will look higher than it really is. But if you use $12, you see a much more accurate picture of your margins. That's why serious e-commerce businesses always try to calculate their inventory at landed cost, not just invoice price.
Okay, so now we know what it really costs to get products into your warehouse. But here's the next question. What about the cost you pay at the point of sale? This is where things get a little gray. Let's look at shipping to customers, payment processing fees, and fulfillment fees.
Now comes the tricky part, the extra cost you face when you actually sell a product. Should this be included in cost of goods sold or kept separate as operating expenses? This is where opinions differ, and even accounting rules vary. But let's look at the three most common costs. Shipping to the customer, also called freight out. Technically, under strict accounting rules, especially US GAAP, shipping to the customer is treated as a selling expense, not part of cost of goods sold. It's considered part of the cost of delivering, not the cost of acquiring the product itself. But here's the problem. In e-commerce, shipping is unavoidable. Every single order requires it. That's why many modern online businesses include it in cost of goods sold, because it gives them a clearer sense of the profit per sale. My recommendations: include it in your internal calculations so you know your true per order profitability. Just make sure you're consistent. 2. Payment processing fees. If you sell online, you know about this. Platforms like Stripe, PayPal, or Shopify payments typically take about 2 to 3% of every sale. Again, technically, these are selling expenses, but practically, they are a direct cost of every single sale. Some businesses treat them as part of cost of goods sold to calculate something called contribution margin. Basically, how much money is left from each sale after all the direct costs are covered. For most e-commerce businesses, including payment processes fees in cost of goods sold gives you a more realistic measure of profitability. 3. Platform and fulfillment fees. This is especially important if you sell through Amazon FBA, Etsy, or a similar platform. Amazon charges fulfillment fees, storage fees, and referral fees. These fees don't exist unless you make a sale. They are as direct as cost can get. Almost every business includes this in cost of goods sold. If you didn't sell the product, you wouldn't be paying them. So let's put it all together with a real-world case study. Imagine you sell a product on Amazon FBA. Here's how the numbers might look for one single unit. Supplier price, $10. Shipping from supplier, $1.50. Import duties, 50 cents. That means your landed cost per unit is $12. Now let's look at the selling side. Suppose you sell the product on Amazon for $25. Amazon will take a referral fee, which is usually around 15% of the sale price. That's $3.75. They'll also charge a fulfillment fee, which covers picking, packing, and shipping the product to the customer. Let's say that's $4. And don't forget payment processing, which may take another 3%, around 75 cents. So let's add it up. Landed cost is $12. Amazon referral fee is $3.75. Amazon fulfillment fee is $4. Payment processing fee is 75 cents. Your total cost of goods sold for this product is $20.50. If you sold it for $25, that leaves you with just $4.50 gross profit per unit. Now, here's the important part. If you had only counted the supplier invoice of $10, you would have thought you were making $15 profit. In reality, you're making less than a third of that. This example shows why accurate cost of goods sold is so critical in e-commerce. It tells you the truth about your margins, so you can price properly and build a sustainable business. And that's it, a complete breakdown of cost of goods sold for e-commerce and retail.
And there you have it, a complete breakdown of cost of goods sold for e-commerce and retail. We've moved from a simple formula to a comprehensive calculation that includes landed cost and critical selling fees. Getting this number right is the most important step in understanding the financial health of your online store. I hope this video provided some serious clarity. If it did, please hit that like button and subscribe, because I have more industries to cover in the cost of goods sold deep dive series. Let me know in the comments what platform you sell on and what your biggest cost of goods sold challenge is. Thanks for watching. I'll see you next time.